Guys, welcome to another video in our business cost calculator series. We're dimestordollars.com and we're here for your small business. Today we're going to take a look at a cost calculator for a restaurant business. And as with all other cost calculators, the purpose of this file is to help you cost and price your menu and to make sure you're making money. So what does the cost calculator file do? It helps you model your revenues in your business based on expected sales and selling prices. It helps you capture costs of ingredients, but also your variable and fixed costs. It can be used as a pricing tool for your menu, you know, and also as a planning tool to see what would happen if your costs or prices change. So it's a little more than just calculating your costs, it's actually pretty dynamic. And finally, it helps you understand the net final result of all your activities by way of a profit and loss statement or your P&L. Some points to remember: you key in the inputs and the file is just calculating. So we've differentiated the cells in which you can provide inputs by shading them blue. So only the blue shaded cells will take inputs from you. All right, so the file itself, when you open it up, you will see there are various tabs. This introductory video will take you through each one of those tabs. So the first tab here is how to use the calculator tab. Read this carefully. It helps you get acclimated to the file and helps you understand its components. The next tab in the file is our copyright language. Again, read this carefully. We also have an extended version of this up on our website. This next tab here is our business details and profit goals tab. It's not performing too many calculations, but it's really for you to capture the basic details of your business, keying the business name, address, and everything. And then one thing we want to focus on is you want to put in your customer demographic or key market segment just to keep it front of mind for you as you think through how the real economics in your business. You also want to capture your profit goals, starting with the revenue goals you want to hit per month, and the profit margin percentage you want to earn, and the file calculates and translates that into a cash profit goal that you want to set for yourself in the business. This next tab is where we're going to start modeling out your revenues. So you would start by keying in the month and the year for which you want to model out revenues. And then you get down to this section here where you're going to go menu item by menu item, key in the name of the menu item, the price that you're going to fix, the quantity typically you expect to sell, these being the inputs, and then the file calculates the quantity per month and the sales dollars per month based on the inputs you just provided. Okay, so this next tab here is, I would say, the most important tab in the whole file. It basically helps you cost your recipes. For presentation purposes, we have shown you how this is done for one menu item, but you have the ability to do this across your entire menu for up to 50 menu items in the actual file. So basically what you're doing is menu item by menu item, you're trying to compute the cost of the ingredients. So you're saying what the ingredients are and the cost per ingredient per one unit of the menu item. So for example, let's say you're a pizzeria and you make a large pie of the margarita pizza, for example, right? So you would key in dough as the name of the ingredient and your estimate of the cost of dough per pie. A second ingredient could be sauce, your estimate of the cost of sauce per pie. So you're doing that for as many ingredients as you want to bake in, for up to 15 ingredients. And the last thing, don't forget to include the time it takes for you in minutes to prepare one pie. The reason this is important is, as you'll see further, we're going to capture the variable costs and fixed costs and everything in your business. So time is used as a measure to absorb those costs into the cost of your product. So accordingly, when you fully completed this exercise for this menu item, you have a full view of what this menu item costs you as a business given the cost structure you have in your business by way of variable and fixed costs. Okay, this next tab here is really summarizing the work that you did in the previous tab. So there you did your costing of recipes menu item by menu item. So this tab really is summarizing what this means for all the menu items you did work on. You don't need to do anything on this tab, so just move on to the next tab. So this next tab here is going to help us capture the variable costs in your business. Variable costs are those costs that typically vary with the levels of activity in your business. So let's say you're having a really busy month in your restaurant. You may need to hire more people or get more hours out of your existing employees in the kitchen by paying them overtime. Similarly, if you're having a slower month, you may need to curtail the number of hours, cancel overtime, reduce the number of shifts, or in extreme cases, even let go of people. So those costs that basically fluctuate up and down along with the levels of activity and or revenues in your business, these costs are called variable costs. So the way you'd go about populating this is go through your accounting system, identify those costs that you think fluctuate with the levels of activity in your restaurant business, and include them in this section right here on this tab. Also, don't forget to input the number of operating days per month and the number of hours per day. What these two numbers help you do is they convert the variable costs that you capture up here as a total and convert them into a variable cost per minute. Now, the reason this is important is, like you looked at in the previous tab, these are, time is used as a basis to quote unquote absorb your costs in the business. So your cost of your menu item and the pricing decisions you make are taking into account these costs in your business that typically you don't think about when it comes to pricing your menu. So this next tab here is our fixed and other costs. So unlike variable costs, fixed costs are those that do not change with the volume in your business or levels of activity in your business. An example is rent. Your landlord is not going to give you a break on the rent just because you're having a slower month. Another example could be, salaries for a restaurant manager. He or she still needs to get paid regardless of how busy your restaurant is. So these are typically costs that don't really change with the volume of business, and they're called fixed costs. Another good example is interest on borrowed money. That's a fixed cost. So again, at this point, you're probably sensing what we're trying to do here, right? You're looking into your accounting system and you're pulling items that you think fit the mold of variable, and you're including in the variable cost tab, and the other items hopefully fit the mold of fixed, and you can add them here in the fixed cost tab. So the idea is we capture all of these costs in your business and use them in fully costing your menu item. So that way you get a fully costed menu item and you're making pricing decisions on the basis of that full cost. And that will ensure that you're making money at the end of the day. All right, guys, this has been a lot of information. So let's quickly recap of what we've taken a look at so far. We set ourselves monthly revenue and profit targets very early on in the file. We then modeled our revenues. We used our price list, quantity sold per week, etc. Menu item, and we modeled our revenues. We then went out and costed our recipes item by item again, using cost of ingredients, but also taking into account the time it takes you to prepare each menu item. And finally, we looked at variable and fixed costs in your business. Now, this next tab brings it all together. This is your P&L, or profit and loss. So it's basically telling you this is the end result of all the work you did. by way of a profit or a loss. So the cool thing about this file is they've included alerts every step of the way. So if as you add more and more costs into the file or take into account more costs into the file, your profitability on products could change. When they do that and you're finding out that some products are beginning to lose money, that's basically prompting you to pay some closer attention to how they should be priced, or if you want to sell them at all. So these are decisions the file is helping you make, and there are alerts built in the file, bringing your attention to those specific points. The other cool feature about the file is also break-even sales. The file computes a break-even level of sales, which is, the minimum sales you should be making if in your business if you want to make any money at all. So watch this number carefully. So given the cost structure in your business, when you compute this break-even sales, if your actual sales are lower than break-even sales, you're almost guaranteed to lose money in your business. So it's important to understand and keep this number in mind as you work through the file. All right, folks, it's been a lot of information. Hopefully this helped you and you're now motivated to download the file and play around with it. Obviously, let us know if you have any questions. We hope you do, because that just gives us feedback so we can improve our product. And good luck.